Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday. I think on the other update I said Wednesday. It is for Tuesday, and we're the 30th of March 2021. Last trading day of the month tomorrow. Remember, this is going to be a very important week in the sense that we're going to get a lot of jobs data. You get the ADP numbers, you've got the Challenger numbers coming out, you're going to then be getting the jobs data. We're going to get Chinese growth, I think, tomorrow. So be ready for that as well. Now, I did send out just half hour ago the first email about the enhanced Bollinger Band course. It is ready for purchase. I sent it to all my paid subscribers first. Nothing that I'm not going to send to you. If you're on our mailing list, and that'll be the key, it'll go out probably to you tomorrow. So you can take a look at it, give quite a bit of information about it right within it, and we'll just keep going. The course behind it, there'll be two more following this one, in fact, and I've pretty well got what they're going to sell for and where they're going to be. So enough about that. You know, I was thinking today, I'm watching the markets break in the stocks, and they were getting hit pretty good. And that's all because you were looking, at least I think it's all because we keep hearing about more spending from the Biden administration, and we're looking at the 10-year note going up today to 177 and a fraction. So what I've been telling you, you know, we're caught in this trading range of 150 to 175. You're poking your head over it. Eventually, I'll be saying you're probably in the 170 range, maybe to the 2% range. You know, there's going to be ratcheting up of that. I'm not capping it because you can't. Bottom? Nah, it would take another round of COVID, which can always happen, to make me think interest rates are going down from here. So we're going to see people going to work. We're going to see more and more going on. The weather's changing. This is all good stuff. So that's what you've got. For the stock market, it doesn't like higher interest rates. It's concerned about that. Metal markets hate it. The dollar likes it right now. Why? Because you don't have the vaccines going out in Europe, and you don't have them in emerging countries going out. So the dollar wins by default. Our economy's picking up, and we have the vaccines. That will change as Europe starts getting more and more of their shots out to the populace, then eventually the emerging markets, and then we'll say that the dollar, well, that's a problem for the market because of interest rates, which are starting to choke off the economy. Too strong of a dollar, people aren't buying our goods and services from us, blah, blah, blah. And that's when the other part of the equation, I think, will take off. As for the weekly area chart of closes, as long as you stay over this red line, which is the 18-week moving average of closes, I'm bullish. It's that simple. This is how I define bias on a weekly chart, and I define it the same way on a daily chart using the 18-day moving average of closes. Now, you have to admit that we were talking, if the market, when it was coming back up here, it would have some resistance, I thought, right in that general area, and that is what it's done. It's run into that buzzsaw. But is the chart action bearish? Well, it's not anything. You really have a lower low and a higher high. We don't know what today's going to do. Remember, we're already into Wednesday's trade. I cannot tell you that, hey, it's getting over 39.71 and a quarter, 397, 39.71 and a quarter, and creating that pattern of higher lows and higher highs. It could. We'll have to wait and see what it's going to do, but it hasn't done it yet. So the pattern is void of trend. Certainly we know the market's knocking on the door of highs. There's no mystery to that. The market is staying with a bullish bias. Notice that each time it's hitting this 18-day average, it throws itself back over it. That gives you the bullish bias. Where's support if you break down tomorrow? I'll look for the 39.1850, the 18-day average closes. If the market decides to rally, where would I think the resistance will be? Let's try it at that 4,000 level, the upper Bollinger Band, 39.99 and a quarter right now against that number. So that's what I'm seeing in the market currently. And in terms of momentum, it's overbought. That overbought bothers me. It's not even trying to get both numbers over 80. Markets that get overbought resolve themselves in one of two ways. If they get overbought, they can then come up here and start creating the the slow stochastics to embed. As they do that, it generally empowers the market to go higher. But there are other times when the market just gets here and doesn't go anywhere. It did it back here, and then you start dropping back to the 18-day average of closes. We're not embedded at all. So you either embed, or to get a correction of this overbought condition, the market generally pulls back to that 18-day average. So I'm more inclined to think it's going to pull back, but it's void of trend anyways. I see in the NASDAQ a downtrend with a problem. What I told my paid subscribers in the morning, I said, it's not hard to see that you should be selling at the 18-day average looking for the lower Bollinger Band. Doesn't take a genius, and my course certainly would teach that. The problem is there's no money in this trade. 12,888 to 12,788, and the risk is bigger than that. So that was the problem, and you could see you're just sort of caught. I think the algorithms and the other pros see it. But with a gun to your head up here, which way do you want to be? You want to be short until the 13,003 level's taken out. You have lower highs, lower lows. If the 100-day gives ground, then you open the door possibly for the 12,500. What would turn the market bullish? There's always two sides to a story. Well, you've got momentum down, but it's not nosediving. If it got over 13,003, it could all of a sudden give you higher lows and a higher high over that number. Then you're putting into play these numbers up here. Interesting time in the market. How is it going to play out with employment? Is the market going to view the employment's going to cause interest rates up? Or is the employment number going to be, yay, the consumer's going to have even more money, these markets should go back to the upside? There's your two arguments. In the Dow, you've got a market that's embedding. So let's take a look. You can't count tonight, Wednesday, because we don't know where that'll close. But we can go back to Tuesday. Both numbers were over 80. Both were over 80 on Monday, but I have my doubts. They weren't that way on Friday. So the big day is going to be today. Now, what else did I say to you yesterday? Did I not say Tuesday reversal day? I bet that I did. And you had that in the stock indices. Not a surprise. That's my point. Just not a surprise. Now we get to the Russell, which is suddenly saying, hey, I'm not as bad as the chart might look. You still have the downtrend, but you hit the Bollinger Band once, and ever since then, the market's trying to feel its oats, try to get back up. You negate the downtrend if you can get over this high right here, which was 22.23 even. So any move over that negates the trend down, but what we've really done is gone from the lower, we went from the upper Bollinger Band to the lower Bollinger Band, and if we get over that number, we're back to the 18-day average, and we just have a neutral chart. That's the reality of it. And I'll repeat what I say over and over. When you hit a Bollinger Band, I know this is where people are the most bearish. You do know that. This is where they're the most bullish, when you're at the top band. Telling you, turn off television, turn off everything, look at your chart. It's the hardest thing in the world to do, but it takes a strong stomach. I had ulcers when I was younger. I don't have them anymore. I came very much into comfortable with it all. And I got sick because, a client would call, oh, look at this. But of course, I didn't know then what I know today either. So it's a lot different. That doesn't mean I'm going to be a winning trader or a losing trader. I know more. Age does that. The higher highs, the lower lows in this, there's no trend in an oversold market. Where's the VIX keep failing? Right here. If it fails and it drops, what's it mean for stocks ultimately? It's bullish, not bearish. Goes to flip-flop of it. Just something to think about. 30-year bond, okay? Finally, flat momentum. Do you think this market's waiting to see the jobs data? I got that's what I think. Lower low, higher high, bouncing around. Now that we've gotten up today, I can tell you already, The high was 155.12 on Tuesday, and we're not through that yet. It looks like it, doesn't it? That's why I always look at the numbers on a chart. Charts, because of how they're going to plot the numbers out, they can trick you with your eye. I always look. So we have the higher high, a lower low. The market sort of caught between the 18-day average and the Bollinger Band and flat momentum. If we come to the 10-year note, you hit today the lower Bollinger Band again. I was not looking for any further follow-through, and I'm looking for the bounce. Oversold, higher high, lower low. I don't see a trend there. When I step to the dollar, you got an embedded reading with today's action. So the market has converted itself now from being overbought to locking in another uptrend. So the dollar's saying, I think, this is what I think it's saying as a group, I think U.S. interest rates are going higher. I don't think the other currencies against it are prepared to raise their interest rates. With COVID as bad as it is still in many parts of the world, Europe a big part of this, the dollar wins by default, and that's what I think is going on. At the same time, I will stick with what I teach. I would never tell one of my clients to go long, fresh longs over an upper Bollinger Band. You only stay over that number 5% of the time. Flip-flop to the Eurocurrency. I would never tell them to go short under that. You have your embedded reading, so this is that story I've been saying. Europe can't get the vaccines out quick enough. The U.S. is going into mega doses, more and more places opening for it. We're going down the tiers. In the States, where they're getting younger and younger people, we're headed towards herd immunity sometime in the summer. That's what it appears to be, according to all the experts. We'll see what that does. British pound still in a downtrend, but why would one want to sell that big of a break in the market in terms of momentum? Not price, in terms of momentum. I have my doubts. Bitcoin. Still looking like a market that's going to trade within these bands. It got a bullish piece of news today when PayPal said it's taking now the cryptos. So certainly taking the Bitcoin. I don't know the full list of what it's going to take. So you get Tesla, you get this, you're going to have probably one of the other major credit cards coming in with it. Okay, do I think they're doing a lot of business in it? No. But I think it's great press to say you're willing to take it, and I'm up there with all the other techies, and I can do that too. That's what I think's going on, and I'll stick with what I've said. At the end of the day, I don't believe that Bitcoin will ever be an everyday currency. I think it will be something that central banks release. They will track it in a different way. That doesn't mean that entrepreneurs can't do this, but who's trading in their Bitcoins? That becomes a big question. Then we get to the May Brent. Now, it's time to leave this. You know why? Can you believe we are sitting here on March 30th? The last trading day in Brent, the May contract, is tomorrow. Many people don't know that. So I'm going to have to move these to get the same month against month to the June tomorrow. But you can see how the market is just expanding that roll, going back up again. And that's because we have OPEC coming out Thursday. They meet on April 1st. It won't be a Fool's Day. They're going to give us an idea of what they want to do. We know already, if you're reading the news wires as I do, that Russia wants to produce more oil. Can they get that out of the Saudis for domestic use? Then from there, what do the Saudis want to do with everything else? We've got to give the Saudis credit. Credit where credit's due. They have held the line. It's cost them, but they have kept prices very, very stable in this market. In a time when it could have fallen more with what's going on in Europe and other countries. You're getting cries of help me and anger out of India because of OPEC pricing. Higher lows, higher highs, but staying under the 18-day average, nothing there. Here's a market that came back and knocked on the door of resistance. We were talking about that this week. I just happen to think come spring, the driving is going to be total insanity. I went today to wash the car in the afternoon. I swear to you, these are hand washes. There were 20 cars ahead of me. I went during my lunch break, as I call it. In order for me to get my car detailed, this is the hand detailing, the earliest date they could give me, and they do 3 cars a day. I mean, this place is a really nice place, right? April 19th. I took the appointment, but that gives you an idea. So you put it all together. People are out. They're taking care of things. There's that vibe about everything. Just tells you. Chicago's not raining right now. Our weather's actually been okay. People are taking care of things. I'm Ira Epstein. See you tomorrow.